Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Triple L Lanny, Bert the Hurt. Get ready, everybody. We're going to talk to you about a stock that was covered like crazy over the last week.
But before we dive into this dividend stock, hit that subscribe button, give this video a thumbs up. We're here to talk to you about a stock that dropped over 10% on Friday, October 22nd.
Yeah, I'm sure most of you are already kind of guessing which company it is. But before you do, don't forget to check out our store below to see one of the Dividend Diplomats coffee mugs that are available here. Great stocking stuffers, aren't they, Lanny?
All I know is the best part of waking up is that Dividend Diplomats cup.
Exactly, because who doesn't love coffee, tea in the morning? All jokes aside, everybody, we are always on the hunt for undervalued dividend stocks. We are looking out like crazy to buy undervalued assets that continue to increase its dividend year after year to grow your passive income.
Dividend investing is what it's all about, and that's what the Dividend Diplomats do, baby. And Friday, it was very unique, kind of confusing, kind of not. You know, I know Bert and his wife made some big moves too on this dividend stock on Friday. Bert, what stock was so covered, had a pretty solid earnings release, but dropped like a pound of bricks?
All right, Intel, ticker symbol INTC.
Intel, baby.
Yeah, we've been talking about Intel. They've made
Intel
appearances
inside,
on
Intel outside.
Yeah, well, inside our portfolios, because my wife and I added some after this earnings release to grow our position. Not there yet. We haven't gotten the Intel chips put in our bloodstream. But so what on earth happened with Intel? They released earnings because we are in the heart of earnings seasons. Plenty of companies, big and small, banks, IBM, other giants, Procter & Gamble, J&J, over the last few weeks have been disclosing their quarterly earnings. Up Thursday night, Friday, it was Intel's turn, and the market did not like what they heard.
No, they didn't. They were looking and they were not liking. Intel actually dropped 11.68% in one day. Not one, not two, not three, not four, but 11.68%, essentially 12%, finishing off at $49.46. And for those that really want to know, they're pretty much, they're only a few dollars away from their 52-week low, but they are now almost $20 from their 52-week high.
Yeah, they're back to zero for year-to-date. Year-to-date, they're now down 0.42% for the year. So they're back where they started. So it shows how much they appreciated to start the year. And now, to your point, they are off that high.
Here's the question. Is the comeback going to be better than the setback?
We'll find out, and that's what a lot of people are still trying to figure out with Intel. Let's first start with why exactly the market wasn't thrilled with it. It's all about the sales, and that seems to have been what's been hurting Intel over the last year, especially if they've come down from that high. While sales guidance stayed the same, they continue to be hampered by a lot of the supply chain issues that continue to hurt other tech giants as well, because as we all know, there are chip shortages that are hitting tech, cars, industries alike.
And Intel, though, still reported over, $19 billion in revenue for Q3?
Yeah, and it was up 5% compared to last year. So that's where there's a little bit of mismatch between the forward of what the analysts are looking and expecting with Intel and what the numbers are actually telling you when you peel back the earnings release.
Think about this. Revenue is up. Gross margin was also up.
Yeah.
Operating margin was pretty much even keel.
Yeah. But net income was up 60%. Their net income was $6.8 billion.
60%, $6.8 billion of net income. $6.8 billion net income on $19 billion of sales.
Yeah, that translated to $1.67 of earnings, up from $1.02 last year. Interestingly, though, the earnings cover their annual dividend. So their annual dividend's more than paid for just from Intel's earnings here, because their annual dividend is $1.39. They earned $1.67 here in the last quarter.
So one quarter covers the whole year is what Bert's saying.
Yeah, so that's what's interesting. The metrics are showing they're a cash cow. They continue to pull in cash. I think, what did it say in there? In the third quarter, the company generated $9.9 billion in cash from operations.
They just couldn't get to $10 billion. I think that's got to be it.
Yeah, their accountants were sitting there crunching, just how do we get this to 10? They wanted that.
9.9 billion, almost as much as how much Bert produces in one day.
Exactly.
But Intel, great results, great earnings, great balance sheet, great income. stock price way down.
It's all about the future sales. How are they going to compete against AMD, some of the other chip makers out there?
The market, as you know, Apple has their own chip, more and more penetrating their own products. And then I believe Google is now coming out with their own chip.
Yeah, so they're getting some pressure there from a lot of those legacy companies that purchased from Intel. How is the company going to adapt? How are they going to fix these supply chain issues? We know from earlier in the year, they've talked about how they're going to invest heavily in building a factory in the United States to help prevent these issues from occurring into the future. Still a few years away though. It's going to take time to build. It's going to take billions of dollars, but it should help them in the coming years.
No pressure, no diamonds. Intel, again, ticker symbol INTC. So we really wanted to take a look back at Intel and see if this is now a great stock to evaluate for your dividend stock portfolio, for your just investment portfolio, because when a stock drops almost 12%, all eyes should be looking at, is it time to buy Intel? Is it time to buy this stock? So Bert, are we going to run them through the Dividend Diplomats stock screener?
Oh, you bet we're going to there, brother.
Oh, wow, he's putting out the Hogan over there.
Yeah, so we're going to run them through the screener where it looks at the three metrics and the one bonus: price to earnings ratio, payout ratio less than 60%,
right,
and a history of increasing their dividend. And that bonus metric is the dividend yield. So, all right, Lanny, where did Intel end the day? Why don't you kick us off with the first metric?
Well, the price to earnings ratio, which again is looking at current share price, we're going to be using October 22nd, which is $49.46 for Intel stock. Right now, analysts are projecting forward earnings to be $4.79. I mean, that equates out to, again, a significantly and still low price to earnings ratio of only 10 times forward earnings, Bert.
Significantly cheaper than the market, which is in the high 20s right now, and definitely cheaper than a lot of those other tech companies as well, which are going to be in the high teens and the low 20s.
Like I always say, let's go over to that second Dividend Diplomat stock screener metric, the dividend payout ratio, handing the baton to Bert the Hurt.
All right, I said their annual dividend is $1.39. Divide that by the $4.79 EPS. That gives you a payout ratio of 29.02%. Great, plenty of room to keep growing that dividend.
Guys, Intel down 12%. Your ears need to be perked. Your eyes need to be open. Again, we know it's a legacy company, but these metrics, it's not like the payout ratio is creeping up because earnings are slowing. It's not that revenue is slowing like another old tech company that we know of, IBM. This dividend is well covered, extremely safe, and has room for growth.
Yeah, it was already covered by 1/4 of earnings. So think about that. Again, just keep thinking there. Yeah. They are covering that dividend. They are generating cash.
Tucking it in, the blanket.
Yeah, we'll move into the third metric here before we get too far down that path. Their 5-year average dividend growth rate is 6.14%, and they've increased that dividend for 6 consecutive years. Again, we'll see they continue to have room to continue growing that income. They're generating the cash. They have the payout ratio, as we just mentioned a few seconds ago. So feeling good about Intel's ability to continue growing that dividend going forward.
You know what? I would love it if Intel went like NWO style, Hogan, WCW. I was more of a WWF/E fan, but then they just come out with a ballistic increase in 2022 to really say, shareholders, thanks for riding with us, and screw all those who are riding against us. Because
well, yeah, because we're shareholders, of course that would be fantastic. Like, help us, help me, help you.
So with that dividend yield as the bonus metric, because that stock price just plummeted almost 12%, Intel's yield has just jumped so many basis points. They're now at 2.81%, which is more than 2 times the overall stock market, and pretty much, I know at least that's around the average of my overall taxable dividend stock portfolio.
Yep, nope, I'm right there with you, Lanny. That's more than double the market, to your point. And again, it's crazy that Intel's yield is now well above 2.5% and is now trending towards 3%. That would be insane if they actually got to 3%.
And you know what? You know, a few weeks ago, we did cover Intel as a potential stock to buy. They were on a few stock watch lists. And yeah, this yield was at around 2.55 to 2.6.
Yeah.
So jumping to 2.8%, you're definitely getting, obviously, paid more for being a shareholder.
Yeah, so let's summarize their metrics quickly. PE ratio 10.33, payout ratio 29%, 5-year dividend growth rate of 6.14%. 6 years of increasing their dividend. Hopefully we'll see 7 here soon, and a dividend yield of 2.81%.
So now with these metrics, I know I'm going to ask Bert here, what did you guys do on Friday?
Yeah, so my wife and I each grabbed 10 shares of Intel. So
20 shares, throwing down hard, LeBron James style.
We've both been building positions over the last year. I've wanted to continue slowly adding to Intel because it wasn't a full position and we're still not there. But seeing the price fall, we were in an unrealized loss position. I figured this was as good of a time as ever to continue lowering that cost basis, and I will probably keep doing so over the next few weeks until we feel comfortable with our spot.
You added almost $28 in forward income. Are you guys almost at 100 total shares between both of you?
Probably close to 100 shares. I'll put down here in the video. I don't know the exact number, but I'll write below us exactly how many shares we have. But that would be a very cool thing to work towards, to have 100 combined shares. So we'll keep doing it. I'll keep updating you. So stay tuned to future purchase videos and our Twitter feed to let you know if we're going to continue buying.
Yeah, nice job. I know I'll keep them on my stock watch list. I've owned Intel for a long time, over 10 years. Definitely have enjoyed owning them. I think they're a great stock to consider buying right now.
Yeah. Let us know your thoughts about Intel too in the comment section. Are you buying, watching, are you staying away after this recent earnings release? Are you focused on other tech companies instead? And as always, if you haven't, please subscribe to our channel, give us a thumbs up, and let us know, are there any other stocks that you want us to do videos on going forward?
Guys, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.